Straight up to the Indian rupee then, and that has strengthened sharply against the dollar after the RBI stepped in. The dealers are calling it a massive intervention, but despite the central bank's move, another record low may be on the cards for the Indian rupee. If you look at the 2 months NDFs, is trading at around 54.45 to the dollar, implying that the rupee will decline below 54.30 to the dollar. The Indian rupee has already declined over 1.3% in the spot markets this year, and if you look at the financial year, the rupee has declined 8% since March 2012, making it the second worst performing currency in Asian markets. The RBI has been selling dollar and has also announced measures to curb the rupee's decline, but dealers say that this could prove to be a losing battle. For more on the Indian rupee, we are now joined by Mr. A.V. Rajwade. He is Forex and Treasury Risk Management Consultant at A.V. Rajwade and Company, and he joins us in Mumbai. Mr. Rajwade, hi, welcome to the show. Today was yet another day when we saw a decline in the Indian rupee. The RBI intervention also has continued for many sessions now. But do you think it would continue to support or defend that 54 level?
Well, as I have been saying on your program several times in the past as well, that the only thing that can stop this slide is a massive enough and continuous intervention by the central bank. Now, I think increasingly its ability to do that probably will come under question, because it has implications in terms of liquidity, it has implications in terms of several other macro variables. So I think, yes, today they intervened significantly. One doesn't know the amounts, and the rupee has strengthened. There is also some talk that the oil companies' demands may be satisfied in a way, quote unquote, outside the market. But yes, that may reduce some volatility. But whether it will reduce the downward pressure on the rupee, I have my doubt, because I think we have a very fundamental gap between demand and supply. And I think that probably is likely to persist through 2012-13.
Mr. Rajwade, there also are the informations about the decline in the India's forex reserve. If you look at those numbers from the previous week, and also RBI trying to buy those bonds worth nearly 120 billion in the open market on 18th of May. How do you look at these numbers?
As I said, it will have to combine any intervention with sterilization of the impact on the money supply, which intervention will bring in, because otherwise we are going to have problems with liquidity and therefore investment and growth and all the interlinked issues. I think it's a very, very delicate balancing act which the central bank would need to perform. And I'm not sure that that proverbial, the squaring of the circle is at all possible. One of those 2 or 3 things will have to give, either inflation or the exchange rate or growth somewhere. And I think otherwise it's going to be a more and more difficult proposition as time passes.
Mr. Rajwade, also what the markets are getting bothered about is the oil payments when the month of June arrives. I mean, are we continuously looking at further decline for the Indian rupee then?
Yeah, I think the downward pressure will be there. The question is how long will the RBI sort of persist in intervening, because you might recall that just a couple of days back they made some regulatory changes on the EFC accounts. I don't think it had any effect, nor it could have had, because I think the total balance, what I have seen, whatever figures I have seen, is about $4 or $5 billion. Now that's probably neither here nor there, and 50% of that only means about $2.5 billion. So I think the remedies available are limited. The basic gap continues, and therefore it is likely that the downward pressure will continue as far as in the foreseeable future.
What's your sense on the decline in the forex reserve? Do you think that's a bigger issue or a bigger concern really?
Yes, I think decline in the forex reserves would be a matter of concern for the central bank and the authorities in general, partly because the quality of the reserves is not very sound. They have been built out of somebody else's money, out of either borrowings in global markets or the portfolio money coming into the Indian market and so on and so forth. Now, increasingly, we have become over-dependent on continued inflows of capital. We have made our current account taken it to such a level that this dependence on continued inflows of foreign capital and therefore a continuous increase in the net external liabilities of the economy, I think has probably become inevitable, at least as far as 2012-13 is concerned.
Mr. Rajwade, how do you look at the international cues as well? Because while the German data today has been slightly positive, but the way the euro has been and the payments coming out of Germany, Spain and Italy also in this week is something weighing on to our currency as well.
But now I think it looks a far stronger bet to say that there is far greater probability now of Greece moving out of the Eurozone. Although it's going to be very messy, it's going to have a lot of practical issues and problems. There could be capital flight from some of the weaker economies in the southern cone to Germany and German banks. So I think we are going to see a great deal of uncertainties and volatilities in the Eurozone as time passes. We have had two recent elections. They have brought in they have strengthened political powers which are opposed to austerity. So I think we have too many question marks right now. And to my mind, given the nature and degree of those question marks, that the euro has held so well is itself a surprise to me.